General Electric came first. J&J came next. And Carrie, you were explaining what you think between these two. Which one you like better?
Yes, I think J&J makes more sense. There are two businesses, well, really three. I mean, there's the healthcare business, two types of healthcare. There's drugs, medical devices, and then the consumer business. They all evolved naturally out of the same company. But when you develop a drug and it becomes Tylenol and then it gets sold at CVS, it's not the same as where you have to invest hundreds of millions of dollars in developing a cancer treatment. So there's capital allocation differences, there's problems with branding, there's how you market these types of different new brands or drugs, and an evolution occurs, which is natural, and the market has trouble differentiating in what they want to invest. Who are the analysts who follow those companies? Who are the people who buy those investments? And therefore, it is the logical conclusion to split them up and naturally have different companies. The market, interestingly, did not change the price of J&J much to reflect this. And GE, similarly, even though there are a lot of side-by-side businesses that didn't have a lot in common, the market moved the stock up somewhat, but it shows that the market has been pretty efficient about thinking about these different, very, very different companies, and the fact that as conglomerates, they really haven't worked in the way that they might in the future, but the pricing didn't change considerably, and that was interesting in our opinion.
So 3M, you think, could be a candidate. Why is that?
Oh, there are many that could be. I mean, 3M is in the Scotch tape business, and they're also in industrial businesses. They do anything that has to do with adhesives, but beyond adhesives, types of chemicals that address cohesion and even imaging and the way to see things in a medical, healthcare, industrial, and consumer sense. So these are not businesses that really fit together naturally anymore. Again, different capital allocations, different types of branding, advertising, marketing. Again, a consumer product would go in a different type of fund sometimes, followed by different analysts. It's confusing to the marketplace if you've got industrial and healthcare and consumer in one company, as with J&J. So yes, definitely 3M would be natural to break up.
Carrie, why go ahead and move with the breakup if both Johnson & Johnson and GE were initially cheered by the market and then kind of gave back those gains? If the market's not going to really give you credit for breaking things up anyway, what's the point?
But this is 2 or 3 years from now. So eventually, I think the market will recognize that there are entities that should be looked at differently. They'll have different types of measurements to value them. When you think about consumer brands, that's a very different style of investing than a drug that's in early development that could be worth, billions of dollars in a few years, but takes capital and commitment and many years where you have to sort of discount the value and think through how the market would price that. So definitely over time, you can put higher values on very clear, defined entities where the investors can make those decisions. So yes, we think that these will be valued very differently in the future, and there will be enhanced gains. Interestingly, if you think about your parent company, I've always wondered how the roller coaster ride of the stock market is synergistic with roller coasters at Universal Studio. And I know in a metaphysical sense that's true, but I mean, not in actuality.
So Comcast, you think, could be another target, and Alphabet, too. We're almost out of time, so why don't you run through both those quickly?
Yeah, so Comcast, a great cable company, has bought a lot of content over the years and is in the theme park business. I mean, Universal Studios, it could be that the theme park is spun out. You have streaming as a business in content, or the broadcast side of the business, and then eventually just back to all the cable systems. But Disney, wow, Disney has got everything in it. Google has got streaming, it's got search, it's got YouTube, and also the other businesses that people might pay a lot for but are just a drag right now.
Shepard Smith here. Thanks for watching CNBC on YouTube.